Anyone got a question?
Liquidity. Can I just talk to you about liquidity in December?
Yeah.
Uh, some of the communication we're having was that December becomes more difficult to trade in. Is that because there's less movement and less volatility, or is that more unpredictable? What are the factors and what do we need to watch out for in December, please?
Okay, good question. So, like every business, seasonal times of the year, things slow down. And, obviously, a lot of businesses, unless you're involved in hospitality, as I am, slow down over Christmas. So, think of it like this: market participants are made up of retail traders like us, and a lot of us will drop out of the market for obvious reasons. But also, the people that move the markets are the banks and the brokers, sorry, banks, the hedge funds, the institutional traders. Now, those guys who are trading to make money, by now they will have hopefully made enough for a decent bonus, and they're going to be backing off. There is no point in risking part of that bonus in the last 3 weeks of the year. Yeah, they just want to end the year, get their bonus, start getting in January. You can understand that, whether it's a hedge fund trader or a bank trader or whatever it is. Um, so they're backing off, and there's just this natural, decrease in volume and volatility because of the Christmas period. Who wants to have a load of positions open over Christmas, New Year, when there's so many days that are closed, when they're not expecting much movement? Why have the risk on? There's just no point, is there? You don't want to, if you're closed over, you're not going to do anything on Christmas Eve, Christmas Day, Boxing Day. You come back 3 or 4 days later, and then there's a gap up in the market, or gold's open $20 higher for some reason and you haven't been able to trade it in that period. You just don't want that risk. So this is why volume will decrease as we head into the holiday season, and businesses are closing down, people are taking time off. Does that make sense? um the second, August is also like this. I find August, I've had some of my worst months in August. The last 2 weeks of August in particular, I find that are really tough. And the thing is, and another way it can be tough is that because the volumes are lower than normal, because liquidity is less than normal, because there are less people trading, if something happens, I don't know, someone says something or some geopolitical event happens unexpectedly, an outsized reaction can occur. So I don't know, let's say there's a missile fired in somewhere in the world, and we're all on tender hooks now that there might be another outbreak of war in another region, just for example. Gold jumps. Now, maybe gold would normally jump $15 or $20. That could be expected, and then it will pause and wait to see how things develop. In this kind of situation, gold might jump 50% more than that. It might jump, I don't know, $25, $30. Um, because there's less liquidity, people who are desperate to buy gold, who might be short gold into that piece of news, might have to chase it that much further to cover their short position because the liquidity just isn't there. That can be great if you happen to be long gold and this unexpected piece of news comes out. But obviously, if you're short gold, it's going to be a killer. So this is another factor that you have to take into account when you're trading over these difficult times. You could sit there watching them gold sit in a $5 range for 2 days, and then suddenly it can jump $30 on almost nothing. Does that make sense?
Yeah, thank you.
Okay. Anyone else got a question? Good question. No questions. Okay. Until you have got questions, the only thing I'm thinking about doing is going through the trade sheet. So if you've been through the trade sheet already, if there is any particular, for those of you who are just joining, hi Mehran. Um, I've just been asked a question about why why markets are more difficult to trade in December, why liquidity dries up, and I'm recording this, so I'll post it afterwards. I won't go through the question again. I'm waiting for questions. I really hope you have some for me. But while I'm waiting for questions, I thought I could also work through the trade sheet that I posted earlier today and explain why I'm doing certain things in certain markets. If there is a market that you're particularly interested in, then please tell me, and I'll start with that one. Okay, right. I'm not sure what you can see. Can you see two charts or one chart or three charts?
Two
Two,
charts.
two charts. Right. Okay. That means we're over here then. Fine. So can you see my cursor moving around?
Yes.
Yep.
Right. Okay. So we're on the hourly and the daily chart. That's really good. Okay. Right. At the top, I've got Dollar-CAD. So I'm just going to start with Dollar-CAD. And please do interrupt me if there's markets that you want to look at or if you've got questions, because otherwise I'm just going to chat away. So I'm going to be going over some old ground here, but this is what we're faced with at the start of the week. So Dollar-CAD been in this horrible sideways channel, very difficult to trade, all the way back to August 2022. So over 2 years we've been doing this merry dance between bulls and bears, and this is what is trying, I hope, is exciting. Although again, it's not been as exciting as it should have been. Once we broke above the upper trend line of that whole sideways channel, which was on the 13th of November now, so that is actually getting on for 4 weeks. We've just gone sideways. It's so frustrating. You know, I've been waiting for breakouts like this for literally years. And when you get them and then you just go sideways, it is incredibly frustrating. But there you go. I don't control the markets. So I have been trying to buy the dollar Canadian on any pullbacks. I'm hoping that this breakout has some legs and the market will start to move higher. We certainly saw that on Friday. So as a result, I had buy a break above 140.95. The Dollar-CAD did all right for us, actually. We were buying it. Actually, no, it plunged further than I expected at one stage, didn't it? It got all the way back down through 139.25. I had a buy order, I think, a little bit above there. I think the next time it tested the low, then it held. I think I had a buy order around 140.00, 139.90, and the first time it broke through that, and the second time it held it. Anyway, you can see what's going on. It's just chopping around, very frustrating. On Friday, I had a break above 140.95 in the hope that we'd get some follow through, and we did. I'm hoping this is now the start of the move. You never really know. If we dip back to 140.90, 140.70, it's a bit of a risk because it's a bit no man's land-ish. I took it from sort of the highs of these two candles, sort of Tuesday, Wednesday, Thursday. Now it's a slightly below that because the high of Wednesday's candle is 140.80. So it was guesswork. I went in with my buy level at 140.90, 140.70. I'm figuring hopefully we won't dip much further than these highs. We've got a little bit of room because I've got us buying down to 140.70. Stop below 140.55. It's guesswork really with those numbers. I'm trying to get us into the long without waiting for a retest of that trend line, in the hopes that we don't miss the move. So the trade may not work. We may turn around and be really irritating and retest 139.50. Obviously, I've got no clue, but that's my reasoning behind that. I've also got a buy on a break above 141.85. I kind of have to have that. That's this long upper wick here from the week before when it looked like we were really taking off. We beat the previous high and very frustratingly then collapsed back and just went sideways for almost 2 weeks. So, but I have to say buy on a break above 141.77, which was that high. So I put it in at 140.185 just to give it a few pips. That's really all we can do. You know, I'm trying to trade a bull trend, or I'm hoping that this bull trend is tradable. So all I can do is buy it on a dip to support levels, but I want to be quite aggressive on that support level. If I should have put this in the trade sheet as well. If we get back to around the 139.5 level, we have to try along there as well. And if that fails, well, then I'm going to shoot myself because it just means that the breakout hasn't happened. We're stuck in a sideways range, and that could be God knows how many years. So that's that. Now, on that note, I've got my thought process is also about this dollar index. Again, look at this, sideways since November 22, so almost as long as the dollar Canadian. I hope this is mirroring some sort of breakout. You see the upper trend line from October 2023. We've talked about this a lot. We broke above it and then retreated ever so slowly, frustratingly slowly. Look, we peaked on the 22nd of November. What are we now? 6th of December it was on Friday. So 3 weeks of drifting slowly back to retest the trend line. I mean, it couldn't be more frustrating. there you go. We've retested it and we've jumped off it. So I am praying that was the retest, and this is the start of the dollar bull trend. It's a nice bullish candle off the trend line, as you can see. Long lower wick, green body. You know, we can only go by what the price action is telling us. Look at these moving averages. Look, the 100, the 200, and the 500 flatlining for so long and converging. It just tells you how long this market has been trading sideways for. Very frustrating. Anyway, look, maybe we're on the eve of a fabulous dollar bull run. I'm not missing it. I'd rather have half a dozen losing trades than miss this opportunity, because if we get on this, it's going to be like we were trading gold most of this year. We did so well trading gold. I was so gold focused because it was just an easy bull trend. We just kept buying at support. We kept buying on a break above resistance, and it just worked. So there you go. It's just basic technical analysis. We've broken out of a range, and hopefully we're starting a trend. We've retested the trend line now.
Jason, sorry, probably
yeah.
probably a newbie question. What does
Yeah,
the dollar index relate to?
Oh yeah, good question. Okay, so the dollar index is a basket of currencies, against the dollar. I don't know the full breakdown of it, but it would be Aussie dollar, New Zealand dollar, British pound, Canadian dollar. I can't even remember how
Okay.
many there are. It's easy to Google and find out if you want to know the
So
breakdown of
so
the
so
basket.
I guess in layman's terms, it's just an indicator of how the US dollar is doing.
Exactly. It's an index of the
Right.
dollar. So
Excellent. Thank
there's
you.
different weightings. I think the euro is the biggest weighting. I think it's something between 40 and 50%, which is why when you look at the euro chart, it'll almost be a mirror image of the dollar index. So the euro US dollar, when you look at it, can you see? It's not a perfect mirror image, but it's not far off it. We've been trading sideways for so long, and now we broke to the downside because it's a mirror image. We haven't come back to test the trend line, but it's a slightly different pattern. The channel's not quite the same. But anyway, we have broken down. Okay, so let's stick with the euro US dollar, because I think I put some trades on there in the hopes that we would be able to. Yeah. So I've got a sell order there, 106.60, 106.80. That is quite aggressive. What I mean, well, it's quite away from where we are. I mean, my thought process, my strategy, if you like, has been to sell the euro US dollar, sell cable, sell these pairs because of this potential bull move in the dollar. And it hasn't worked well over the last 2 weeks, as we know, and we know why. And I mean, look, this is so frustrating for euro US dollar. This is the hourly chart going back to the end of November, just gone sideways. And it's not respecting anything really. This should have been a good resistance level. We've got a cluster of moving averages. We've got the 23.6% fib, but it just went straight through there, and it's been dancing around. I can't make sense of the levels here, but that's just the way it is. And it hasn't worked because we're not respecting moving averages. We're not respecting fib lines. We're not even respecting trend lines, because it's just this random sideways chop. Okay, even here, I can't really suggest a short in the euro US dollar. I have to wait for it to get up to, here we go. I would love to be looking at a level now where I could say, right, we should sell it here because based on the euro US dollar, it looks really good. But the safe way for me to play it now is to wait if we get up to the 38.2% fib on the 1 hour chart, because we've got that resistance. We've got a bit of a swing low here, backing up that could be a good resistance level. We've got a trend line going back to the beginning of October, which is about to coincide with that 106.70 area, if I remember correctly. Yeah, we've got a 200 period moving average on the 4 hour chart, which at the moment is around 106.43. So it's just a bit below that level, but it helps it all to, back up that around 106.50, 106.70 should be resistance. And we've even got a short-term trend line going back to the 22nd of November. So that's what, a couple of weeks old. That rising trend line is coming to meet that descending trend line all around that 38.2% fib area. So for me, that is the level that we have to try to sell if it gets anywhere near it, for those reasons. But right now, well, look, if you want to get into a short position, if you really think that the dollar is going to take off and you want to be a short euro, US dollar, that trend line here comes in at 105.90. So if you want to start selling it there, that could work. I mean, then we've got this trend line coming in at 106.40. But anyway, does that make sense, all of that? No questions, I'm guessing. So
No questions.
sticking to cable, I will show you whatever level I've picked on there. Now, this is the 1 hour chart. You can see, what can I call this? Probably a rising wedge, which is a negative pattern, a rising wedge. Usually you would expect it to break to the downside. And in the context of the bear trend that we have been in since at least September, then that would be a fair assumption. I had a selling around 127.00, 127.20. The reason being we had 500-hour moving average. We had a confluence of fib levels. We even had that trend line. Well, no, we didn't have that trend line because that wasn't there until after we'd broken above there. And it's just not respected it. Again, frustrating. We've gone up, and I don't even know why we peaked there last week at 128.11. I can't see any reason for it. So it is feeling quite random and erratic at the moment, these moves. And as you know, I just haven't been able to make sense of them over the last 2 weeks, and that's why. So what would I be doing? Well, a break below the lower trend line here. Let me blow it up. This is the pattern that we have to focus on if it is indeed a rising wedge. We've got the lower trend line coming in around the fib level of 127.10. We've got the 100-hour moving average around 127.00 as well. So a clear break below, let's say 126.90, 126.80 maybe, will hopefully be the trigger for this to resume that bull trend. And I've got sell a break below 124.80, and that's the reason why. So that would mean we've cleared the 100-hour, the 200-hour, the 500-hour moving averages on the downside if we break below 124.80, and therefore hopefully that is a decent signal. We will have broken through the fib levels, the trend line, and the moving averages on the 1 hour chart. That's all I've got to go on with that one.
Jason,
Yeah.
I notice you haven't got your 55-hour line on the 1 hour. Do you not use it on the 1 hour?
No, I'm not. I don't use it on the 1 hour.
So you use it on the 4 hour and above?
I do it on the 4 hour and
Okay.
above. Yeah.
Yeah. Okay.
It's just, yeah, it's too sensitive for me to. I wouldn't pay attention to it on the 1 hour chart.
Right.
Whereas I would.
Thank you.
I'm more. I would take a trade from the 4 hour chart, but I wouldn't take a trade from the 1 hour chart with that moving average.
Okay. Thanks.
Looking at the daily chart as well, I mean, that's a pretty random mess as well. Maybe it's worth noting that we've got this trend line going back to 2014 on the daily chart. This is the big trend line that I was really focused on earlier in the year. I got all excited when we broke above there for obvious reasons. You break a 10-year trend line, for God's sakes, this should be a really good buy signal. And we just stopped at 134.00, 134.30. I don't know why we were reversed from there. I think there was some economic statistics out. Actually, I think it was a fundamental driver at the time. Now we are retesting that trend line again. Can you see? That is the trend line right there, and the 200-day moving average, which I'm not paying too much attention to because it's just a flat line. So I don't trust it so much. But anyway, it did prove to cap the market on Friday. So maybe it is a factor. We didn't manage to close above the trend line. We gave it a really good test and the 200-day moving average. We've got a red-bodied doji candle there, which could certainly indicate that that little bull run is over, that little recovery with that red-bodied doji. So, you know, we could be headed to the downside. I guess that's actually another reason why, if you're really keen, if you think, okay, yeah, I think that the dollar is going to turn higher, maybe you want to be selling cable around 127.85. That's the trend line. The 200-day moving average is at 128.20. So that's a kind of, what is that, 35 pip range. And it's a lower level to sell than waiting to see if we get up to my level of 128.40. It's a little bit lower than that. I just feel a bit more comfortable at 128.40, but we may never get there. Okay, so that's now
Is
the
this
Aussie and the new.
is
Yeah.
could this not be the market by pricing in the Bank of Japan interest rate if it goes up?
I
pre-pricing
don't
it in?
know. Well, I'll look at the dollar yen on the basis of that, but the
Yeah.
dollar yen really isn't doing anything. The yen's had a bit of a run, but that could be more dollar weakness than yen strength. I don't really know how to read into that. But
Okay, because I think the weekend of the release, because the Fed do their speech, and then I think the next day is the Bank of Japan. So I think that's
yeah,
that's what I'm looking at anyway. Because obviously, if the Bank of Japan put their interest rates up, that's where most of the market get their liquidity from, isn't it? And they kind of
yeah, but
borrow
bear in
money
mind it's
from.
quite a telegraphed move. We've been talking about this move
Okay.
for 6 months. It's not going to be
Yeah.
a surprise.
Okay.
There could be a reaction, sure, but
Mhm.
will it be like an enormous reaction? Is the yen likely to jump 500 pips? I think
I don't
probably
know.
not. We know that a rate hike is coming at some stage.
Okay. Okay.
So for me, the big one with the dollar yen is the head and shoulders pattern. This could be the left shoulder here. This could be the head. This could be the right shoulder now.
Yeah.
But we're way away from the neckline, which is all the way down at 139.5. And at the moment, again, ultimately, we're still trading at the same place that we were a year ago, November of 2023. We're still trading there. We've gone down a bit, we've gone up a bit, we've gone down a bit, we've gone up a bit, but we're still trading exactly where we were a year ago. So in effect, we have gone nowhere. We're just trading in a horrible sideways channel.
Okay.
The moving averages are starting to flatline now, and I'm lost with it. I don't know what to do. I've tried some dollar yen trades, and to be honest, they didn't work. 1 hour chart. If you're talking about selling dollar yen, Rob, then this could be your trigger on the 1 hour chart. This could be a bear flag. We had something like that in gold, and it turned out not to be a bear flag, but maybe this is. You've got a downward sloping trend line from the 20th of November. On the 1 hour chart, we certainly are in a bear trend. I could even put a trend line here like this. Yeah, there you go. And then you've got two parallel trend lines, both descending. We do have a downward sloping channel from the 20th of November. So this could be a bear flag. If we break the lower trend line at 149.40, then yeah, that could be a sell signal. So if you're looking for an excuse to sell dollar yen, for your reasons, and look, we're definitely holding the 200-hour moving average very nicely. We kissed it on Friday and turned around. We closed below the 200 and the 100-hour moving averages. So yeah, maybe you're right. Maybe the market is, maybe that is weighing on the market.
Yeah. Were there some big red candles around July of this
Around
year?
what, sorry?
Because I know there was a forex intervention by them, wasn't there? Because of their bond yield kind of went sky high, and they had to intervene to bring the yen back down. I think it was June or July.
Yeah. That was major intervention. Major
Yeah.
intervention. And look what happened.
Yeah.
Initially nothing, and then the market collapsed. I think we eventually broke some levels where hedge funds just had to get out. If I remember correctly, I think we had record speculative shorts from hedge funds. So clearly there was a bit of a bloodbath. Eventually they couldn't support it any longer, and they got murdered. But that was one hell of a bounce back as well. That bounce back caught me out. I mean, the only trend or pattern I can spot is that potential head and shoulders.
Yeah.
But we're right in the middle of the range now. We're right in the middle of the formation of the right shoulder if it's going to form, and I just don't know what to do with it. So that's why I'm looking at the 1 hour chart for any clue. And if you want to trade it, I'd put those descending trend lines on for that channel. I'd put those upward sloping trend lines for the flag, and see where we go with it. I don't think I've got any dollar. Oh, I have got a dollar yen trade. I'm suggesting selling at 150.50. So yeah, I'm with you on it. I'm just noting the negative sentiment over the last 2 weeks, 3 weeks. I'm trading with that trend. I'm looking at the 23.6% fib. 200-hour moving average, that downward sloping trend line too. So if we recover to the 150, 170 area, I'm suggesting a short. Those are the reasons. Not the greatest reasons, if I'm honest, because on the daily chart it's confusing. But hey, it could be a good scalp. It's not the kind of trade where I'm thinking dollar yen's about to collapse. Let's sell it there. I'm looking at it for a scalping opportunity. I've only got 2 targets. The targets are 150, 120, 150, 70. I mean, that's, again, targets are quite aggressive, really. Looking for 100 pips on that might be too optimistic. Maybe not. 150. Oh, hang on. Oh, no, sorry. I'm wrong. I didn't put that trade on. I put it on above, selling the 38.2% fib.
Okay.
And I can't show you on but that's partly because I've got trend lines on the 4-hour chart. So actually, I probably, now on reflection, we probably should try a short there, a scalping short. So if you're scalping on Monday morning, look at the 150, 50, 150, 70 area. That could be, you might be able to nick, I don't know, 50, 70, 90 pips out of it.
Yeah. Okay. I was just going to ask probably a stupid question, so that everybody, obviously, who's in the group, how do they analyze their own strategy? As in, if they're a scalper, or they trade trends, or they trade breakouts, or how do you kind of analyze that? What you are as a trader? Are you a breakout trader? Are you a trend trader? Do you trade breakouts? Are you a scalper? Or how do you analyze that?
Does anyone scalp? No? Is anyone a trend trader, or or a breakout trader, or do you combine the two? Which is what I do.
I'm probably more trend, but I'm still quite conscious. I'm still quite a novice. So
I used to do scalping. I used to do quite a lot of scalping, but sincerely, it's a bit stressful. And it's very stressful, and you need to be sitting in the computer a long time, long hours sometimes. And no, really, it doesn't really suit me very much. That's why I'm very happy with your method, Jason. And so it's much longer, much more relaxed. It's much allows much more flexibility and much more quality of life.
When markets behave, it's beautiful, because we can have such great trades. 2 weeks ago, I think we had a phenomenal week, and then since then, it's just frustrating. But unfortunately, we have to take the rough with the smooth. You know that.
Yeah, but I think scalping is also quite cool when you have I think for short periods, not to concentrate purely in scalping. I think scalping, for example, now, that I'm modeling the method, and especially this time, because I'm just moved to Cyprus right now. Just by the way, I just moved to Cyprus a couple of months ago, and so I'm basically setting up my house, setting up my life here, and so it has been a bit stressful time for me in order to concentrate in my trading. I hardly could trade, and has been such a blessing to be following you and be able to just basically sometimes just listen your analysis, your advice, and put the trades. And I'm telling you, 95% or 99%, I would say, it would work. Yeah, and only one trade hasn't worked. Catch my stop loss of all the ones that I've been doing with you, and so. Well, and that's why I'm saying now that it suits much more, really. It is much more relaxing. And scalping, it is wonderful when you want to dedicate a bit more time in the computer, and when you have a method that also that suits you. It can be good. And well, in my experience, scalping, not in very short time. It can be I do scalping for 15 minutes to 1 hour in 15 minutes, which works very well, but it's very short, beats, no?
So you can just focus for that time, do well, maybe get 10 trades
do well,
off, and then
15 minutes, exactly 15 minutes to 1 hour maximum. That's it. It's done. If it doesn't work, bye-bye.
That's sensible.
Yes, but if you have the time to dedicate it, no, and so otherwise, no, well, forget about it. No, it's just these trend lines and Fibonacci's, and that's what it works.
Yeah, I think.
Mhm.
Well, I think most people when they start out, they try scalping, and I think it's actually a good exercise because obviously it's a very intense way of being introduced to financial markets. You're sitting there, as you say, watching every move, and you're probably looking at a 15-minute chart or maybe even shorter term. So the candles are popping up every 15 minutes or 5 minutes if you're on a 5-minute chart. So you're watching patterns develop quickly, you're watching trends develop quickly, and you're obviously in and out, in and out. And I think that's quite a good way to learn about
Mm,
trading. And obviously,
yeah,
because you're trading so intensely, you're doing so many trades, you're learning about trade management and account management and figuring out maybe a
yes,
strategy of how to trade it, where to enter. You're learning about technical analysis.
exactly,
An intense learning experience. So I think it's a good thing to do, but as you
exactly.
say,
Yeah,
I don't think
yeah,
anyone can do
yeah,
that.
exactly. Yeah, and especially what was good, the best part of this experience is that it teach me a lot about the price action, and I think also price action. I think well, we call it also levels but price action really it's a very powerful tool, and for
It is.
for scalp, yeah.
Yeah, it is, and you have to learn about price action. It doesn't matter what kind of
Mm,
trader you are. You have
mm,
to understand price action, learn the
mm,
candles, learn the patterns. Yeah,
mm, mm,
and that is
mm,
yeah, it's a great way to do it. I do agree with you.
mm.
Okay, any other questions, guys?
No.
I'm going to look at gold because I always look at gold, and it's been our favorite market of the year.
Yes,
But
please.
sorry, um, but
What do you
again,
think's going to
we've
happen
got.
there then?
Sorry, second.
What do you think's going to happen with gold?
Well, the market isn't telling me anything.
Hmm.
This is the problem. And again, we are trading now where we were mid to late September. We've gone up a bit, we've gone down a bit. I'm kind of focused on what I think is a developing negative channel. We're trading below the 50-day moving average, but we're
Yeah.
trading it, we haven't tested the 100 yet. We bounced off it the first time, but we haven't managed to stay above the 50. We've got a downward sloping trend line. We've got a lower high and a lower low. Break below the 100-day moving average would obviously be more negative. We've got that at 25.82 at the moment. But right now, there's just nothing happening. No one seems to care about gold. The bulls and the bears are just not interested. This is the pattern we have on the short-term chart, the 1 hour chart going back to 26th of November. It's very random. It's very erratic. We've now gotten up a trend line after last week because it touched it 3 times. The lower trend line wasn't respected at one stage and we broke down. I just don't have any trade opportunities here. It's just quite random and erratic, and it's not working for me at all. And that's rare for me to not have anything in gold. But I've got to wait for something to happen. We're stuck in ranges. The look at the daily chart. This tells you all you need to know, really. Um, the last few days on the daily chart, look, we're just getting dojis with
Yeah.
small bodies, long upper wicks, long lower wicks, small bodies again. Okay, we had a bit of a red body candle, but not much of a follow through the next day. We probed down, we probed up, we closed unchanged. The dojis are telling you everything. There is no conviction in the market between the bulls and the bears. No one's fighting to control gold. Nobody cares. We're just drifting. Look, we closed on Friday at 26.32. We we closed on the 26th of November at 26.32. So one, two, three, four, five, six, seven, eight. In almost 2 weeks, 8 days. We haven't gone anywhere. We've closed exactly where we closed 8 days ago, and that was straight after this bearish engulfing candle. We've had absolutely no follow through from that bearish engulfing candle, so it's frustrating. But I'm very frustrated with the lack of opportunity. But we can't make the market move. We have to just wait. Well, having said that, on the trade sheet, what have I got? I think I've got something like 25 trade ideas. No, I think I've got around 20 trade ideas. So I haven't got a great track record over the last 2 weeks. I have to be honest; it's not been easy. but I'm still finding opportunities. So there's about 20 trade ideas. I hope that I'm being a little bit more coming at it with more of a scalping attitude. I'm only going to have 2 targets for a trade. We've got to take the profits quickly. Not something that's worth running for a couple of days, really. If you see a profit, pick it up, try and wait for another opportunity, because before you know what, the markets have reversed and you've missed the opportunity to take your profit. And as we head further in towards Christmas, of course, probably we've got non-farm payroll out of the way, average earnings and all that. That's a big number that's already out of the way. Now we're really only waiting for inflation. I don't know if it's this week. I haven't checked the numbers. It'll be either this week or next week. Those are the only 2 big numbers. That's the only big number now that will be out before Christmas. And so yeah, we might find that it's very quiet indeed. We've only got about 2 minutes left, I think. Any questions, or otherwise I'll wrap it up.
Do you think January is going to be coming back to the liquidity question at the beginning? January will be a good trading month potentially.
The beginning of January is obviously going to be slow. It always is, as people come back.
Second week onwards.
I always think second week will get good. Funnily enough, when kids go back to school, that can be a turning point. But it's not like kids go back to school on whatever it is, the 7th of January, and then the next day it all kicks off. It's a really slow start.
Right. Okay.
To be honest, 3rd, 4th week of January, you're really looking at for conditions to be getting anywhere near normal, unless there is some sort of trigger to make people jump back into the market. But if there's not much going on, yeah, I wouldn't expect too much in the first 2 weeks of January. There really is a 4-week period over. I mean, this is the quietest time of the year, of course. So, but I will still be churning out some trade ideas, hopefully. I don't take time off, by the way. I'll still put ideas out every day. So if you want to trade over, when the markets are open, I will throw trade ideas out there. Okay, guys. Any more?
Fantastic. We're done.
All right. I hope that was helpful. I'll upload it to YouTube and I'll post it later today.
Okay. Have a good day.
Thank you very
Cheers,
much.
guys. Talk to you
Cheers,
later.
guys.
Thank
Thank you.
you. Thank you, guys. Bye bye. Have a nice
Bye-bye.
Sunday. Bye.